Investors are expecting big things from ReachLocal in 2013 after its big earnings report last week. Here to tell us how he plans to meet those lofty expectations is the company's CEO, Zorik Gordon. Welcome, Zorik. Now, you did $455 million in revenues in 2012. That was up about 20% from the prior year. Earnings, however, were flat. The Street won 6 cents in 2013 and 24 cents in 2014. How are you going to make all that money?
Well, we've got a model that's 9 years old right now. We've continued to consistently hit our model numbers, and we feel very confident that through what we're doing today in terms of greater international penetration of our IMC base, introductions of new products. We had an analyst day here in New York yesterday where we introduced a lot of new products which we think will give us a lot of leverage going forward this year and especially next year. We think we can meet those expectations, and we wouldn't put them out there if we didn't think we can get there.
What about the mobile strategy? Clearly everyone's talking about mobile. What are you doing there?
So clearly mobile is a huge factor now. It's up to almost 30% of all of our traffic coming into our customer sites. We introduced a mobile application last year where our customers could actually have all of their ReachLocal data in the palm of their hands. We saw a 4x increasement in engagement. We've introduced other mobile devices into our sales force, so they're not walking around with iPads in 2013. And we introduced some interesting mobile products yesterday in our analyst day. We're actually being able to allow consumers to book home repairs through their mobile phones with our merchants.
Now, those are consumers. Your business is mostly B2B. You're talking about business to business.
Mm-hmm.
I mean, give me a little bit more about what your business is, because nowadays everyone's looking at consumers, but you're still dealing B2B.
Right, so we started this business because we wanted to help local, small, medium-sized businesses, doctors, dentists, lawyers, traditional yellow page companies. We wanted to help them move from offline to online, and traditionally that's where they spent their money. We saw what was happening with Google becoming dominant, and we've helped them move their spend over from things like the yellow pages to Google, to Facebook, onto display advertising, and that's a nearly $500 million business for us now.
And speaking about Google and Facebook, you are agnostic. You work with those companies. But does Facebook's new search offer any kind of a threat to you?
No. I mean, first of all, if there are new search mediums, for us, we're agnostic. We want to put our customers where they can get the leads. I think it's way too early to tell. Their efforts in that space are very early on, and clearly Google is still by far the most dominant player in search.
All right. Yeah, about $96 million in cash, no debt. You gonna do any shopping in 2013?
Well, you could do some good shopping with that, but no. We're cash flow positive. We're generating cash. We're investing in our business. I mean, every year we keep investing more and more. All the products that we've been developing actually cost money. So we are investing. We are using that cash. Our business would be more profitable if we weren't investing so heavily into it, both from salespeople as well as new products. So we're going to use that strategically. We have done a few acquisitions over the past couple of years, but we're really using that as dry powder for potential acquisitions, but also expanding the products that we just talked about yesterday at Analyst Day.
All right, we're going to watch for it. Thanks for coming on.
Thanks, Greg. Always great to see you.
Thank you for watching The Street.